even in this environment. We are super conservative. Do the stress testing on the deal. What's your break even? Make sure you've got lots of operating reserves just in case that it hits the fan. It's 6 months of expenses minimum as operating reserves. Don't be crazy aggressive with your rent pro formas. We're doing 0 rent growth year one, 2 or 3% thereafter. Very modest increases, and don't get that onerous debt. Get safe debt, like that loan we're assuming on this thing, but 4%, 7 years left on it. That's pretty darn safe. So that's what I'm telling my students.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 421. Rod Khleif is back on the show today. For those of you who don't know Rod, he owns multiple businesses. He's a philanthropist, and he's passionate about multifamily real estate, business, high-performance strategies, and giving back. Rod owns over 2,000 properties, and he's got an incredibly popular multifamily bootcamp and podcast. Rod, it's always a pleasure to have you on the show, and always great seeing you. Thanks for coming back.
It's great to see you, my friend. It's been way too long, and I appreciate you having me, and I'm excited to talk a little shop with you today.
We were just talking before we hit record about what kind of an interesting and challenging year 2023 has been. And I think part of the agenda for this conversation is to get your perspective, what you're seeing out there in the market, what you think is 2024 is going to look like. And then also, because you've been through this before and you've talked about it on this show about just during the Great Recession, what do you call it? The challenges.
The seminar that I had. Yeah, I call it a seminar. We don't call them failures. Yeah.
Your strategies for coping with that and getting past those challenges and how they might apply to people who are finding themselves kind of caught in the cross currents of what's going on today. So tell us what do you see going on out there right now and how are you affected by it?
Well, I'm starting to see opportunities already. Let me throw that out there. We've got a property going under contract today in San Antonio, which I'm super excited about because it's a mile away from one of our other ones, and it's a screaming deal. I'll just give you a quick highlights. It was listed for $28 million, under contract twice for $26 million. They fell through for different reasons. We've got it under contract for 20, and it's 200 units. San Antonio is a hot market. It's in an area a mile away from another one that we have, so we know it really well. Lakefront, the property next door just sold for $137,000 a door, and we're getting this for $100 a door. So just a screaming deal. Very excited. So we're starting to see some things opening up. There's still a lot of, sellers that are asking too much in this current environment. But like I told you before we started recording, Brian, I'm pretty bearish. I really think we're headed for some pain. I'll tell you why. A couple of reasons. First of all, there's a lot of debt coming due by the end of next year. And I mean, I've heard upwards of $1.6 trillion across all multiple asset classes. We already know office is getting killed. The occupancy around the country is horrible. It's not break-even occupancy. It's less than break-even occupancy. And what concerns me about all that is, this debt that's coming due, those people have two options. Okay. And I have debt coming due, so I'm very familiar with this conversation. And so, you either have to refinance or you have to sell. And neither one is great right now. Sales are down, I think 80%. I've seen as high as 90%, depending on who you read from. And refinancing isn't easy because of the debt service coverage requirements, and the cost of debt has gone way up. So a lot of these assets aren't meeting the debt service requirements. And so, that coupled with what's happened with rate caps. I mean, if you wanted to do a $100 million rate cap in 2020, for 3 years, 3%. So the rate's not going to go up more than 3% in 3 years. 100 million, that was $23,000. That same rate cap, when I looked, this has been about 8 months ago, was 2.3 million. Okay. So, besides the fact that, people are having to put money in just to have the loan meet debt service coverage requirements, then you've got the rate cap on top of that. So I think we're going to see a lot of pain. And so, I do believe they're going to prop it up until the election. I think we're going to see some small rate decreases. They've already indicated they're going to do that. but I don't think it's enough. If they do 350 basis point rate decreases, I mean, really, what's the impact of that? I mean, yes, it'll help commercial some, definitely won't help the residential. But, it's a crazy economy we're in right now because inflation's crazy. I'm recently single. I told you that. So I went to the grocery store the other day and bought some groceries. And I'm like, $150 for that? Are you kidding me? And I said, how do people afford this? And the clerk just shook her head. And then you go to the car, go fill up your car. My truck was $120 to fill it up. I'm like, how do people that are on, moderate incomes afford this stuff? So I can tell you, my team, we're avoiding C-class assets right now because I just think that demographic's getting killed. They have to be, based on just what my personal experience has been these last 60 days and, go out there and actually buying things. But, listen, I've been wrong a lot. We'll see. I'm not trying to scare anybody. I just think that, things could get ugly. In fact, it's really funny. I just saw a headline today that here it is right here. Hold on. Let me grab it. Now, this is Harry Dent. Okay. Now, Harry Dent's, an alarmist, and so him and Peter Schiff, the sky's always falling, but he says, economist claims 2024 will bring the biggest crash of our lifetimes in the US. Okay. So, now, I will say this in Harry's defense. I saw him in Vancouver back in the late 90s, and he predicted '08. I mean, literally predicted it. And I think he was off by a year or two, but he absolutely predicted it. So in his defense, I got to give him that. But, now he's talking about, he focuses on consumer spending, but he used to focus on population demographics. And so, it's just, who knows? I mean, again, I look at crisis now as opportunity. I look at it as opportunity. And if there's something happens, the beautiful thing about our business, Brian, our multifamily is it's very resilient. In that Great Recession, multifamily rents exceeded pre-crash levels in less than 3 years. And even with COVID, self-storage didn't get help, office didn't get help, retail didn't get help, industrial didn't get help, but I got hundreds of thousands of dollars in rent relief money, because people have to have a place to live, and there's still a massive shortage of housing. So, it's a crazy time, balancing that shortage of housing with interest rates, with, this debt coming due. Who knows how it's all going to wash out, but it is crazy times we're experiencing right now.
I do remember in the multifamily boardroom that you host, Harry Dent did speak to us during COVID, and he predicted hyperinflation. And we certainly saw that in rents, kind of closely following after COVID.
I'd forgotten I had him speak. I completely forgot about that. Yeah. So if you don't know what we're talking about, I host a mastermind called the Multifamily Boardroom. And I think there's probably between 30 and 40 billion in assets represented by the members, although I've slowed it down. But, we get together and talk shop. And these are all big operators like Brian and myself and a lot bigger even. And so, it's fantastic to get around people that, are doing this business in a big way and think, in some cases, think what you think is hard is easy. And that's what I've always tried to do, is get around a peer group that thinks what I think is hard is easy, which is why I formed that mastermind. But yeah, so, there's some headlines that I quoted a while back. Here's one right here. Forbes, expect layoffs at 51% of U.S. companies. So there's one. Here's another one. More than 20 million U.S. households are behind on their utility bills. 20 million U.S. households behind on utility bills. I mean, that's sobering. Donald Trump, love him or hate him, said the U.S. economy could reach levels of the Great Depression. That was a quote. Elon Musk, who I admire very much, said everyone's lying. A bigger crash is coming. So these are quotes, direct quotes from some pretty sharp people. But then I'm reminded of Warren Buffett's quote, which is, "Be fearful when others are greedy, but be greedy when others are fearful." And I believe fear is coming, and there's been a lot of greed the last few years, and which is why there's so much of this adjustable bridge debt, because bridge debt was put in. By the way, if you don't know what bridge debt is, it's like the hard money lender equivalent from the single family space. Okay. It's onerous debt. It's adjustable rate. It's short term. So sometimes it's very controlling. There's some onerous default provisions in some of these loan documents with bridge debt, but it was put in place to bridge the gap from a non-performing asset to a performing asset. So you'd get the bridge debt because there's no prepayment penalties and in most cases, and you'd get the bridge debt, and then you'd refinance into nice conforming Fannie Mae or Freddie Mac debt. Well, the problem was Fannie and Freddie lowered the loan to value, so a lot of these operators would use bridge debt to show higher returns with less money in these deals, less equity in these deals, which really wasn't what it was for. And everybody thought, the gravy train would keep going, and it didn't. So I think I've already seen some, like I told you before we started recording, Brian, I've seen some world-class operators, losing properties right now. Now, it's not, I won't say it's a pandemic yet, or it's not prolific yet, but I don't know, if the rates don't come down to a point where these guys can refinance, I know a lot of them have done capital calls to the investors trying to raise money to make these, deals palatable for a refinance. And I think investors are getting burned out on it, frankly, passive investors. So
where do you think rates need to come down to kind of help relieve some of this pressure?
Honestly, I don't know, man. I don't know how far they have to go. I mean, again, I got my butt handed to me in 2008. I lost $50 million. So I feel for these people that are in trouble, but they'll survive it. I survived it, and I'm looking at it through these rose-colored glasses, like there's opportunity, like this San Antonio deal. I mean, that was a guy that just ran out of money. We were assuming a 4% interest rate, 7 years left on it. I mean, it's just a phenomenal deal. Lakefront, I could go on and on. Just beautiful, beautiful deal. Really priced well. The numbers look fantastic. And I haven't bought anything in over a year, Brian. I mean, I haven't found anything worth a damn out there. And so, it's just exciting to finally have something and see a little bit of stuff opening up. I think there are a lot of sellers that are still, hoping things will turn around so they can get out of their situations. But I know, I think some of them are waiting too long. I think, the time to solve problems is right now, not to try to wait and hope things go down a little bit. If you're an operator listening to this and you've got a troubled asset and you have a solution to get out of it right now, I'd encourage you to do it, because I think, if things do get really ugly next year, it'll be hard to find equity, period. Capital markets will dry up and, it could get really ugly like it did in 08 and 09. It was like a light switch back then. I mean, you couldn't borrow money to save your life when that happened back then. And so it was ugly. So who knows? Again, I'm not trying to scare you guys, those of you listening. I'm trying to, actually get you excited. If you're, I think incredible opportunity, it could be upon us. There'll be, exponential opportunities to make money. I really believe that. And, and I'm still buying. Yeah. So, there you go.
What do you tell your students? Because you do a lot of training, boot camps, both virtual and in person, and you're teaching people how to invest in multifamily and apartments and commercial. So what do you, and obviously you're sharing this perspective with them. So how do you prepare them to make the right decisions in this type of environment? I
push them to be very conservative, okay? Even in this environment, we are super conservative. Do the stress testing on the deal. What's your break even? Make sure you've got lots of operating reserves just in case that it hits the fan. It's 6 months of expenses minimum as operating reserves. Don't be crazy aggressive with your rent pro formas. We're doing 0 rent growth year one, 2 or 3% thereafter, very modest increases. And don't get that onerous debt. Get safe debt, like that loan we're assuming on this thing, but 4%, 7 years left on it. That's pretty darn safe, So that's what I'm telling my students. And as I was telling you, I've got warrior. They're called warriors. They're my coaching mentorship students. And I'll brag for a minute. I've been teaching 5 years, and they own somewhere between 180 and 190,000 units that we know of. And I'm super proud of that. I mean, they're killing it. And I only know of one deal that's in trouble. So, I mean, let me just say this, one deal that's gone south. Okay. There's a couple that are working through issues. They're going to work through it. And I'm closely working with that. But out of all those doors to have that is I'm pretty proud of that and the success of my students. And, it ties into some of the things we could talk about if we have time as to how I positioned myself when I lost everything in 2008 and 9 from a mental standpoint to get back to the success that I have today, because literally I lost everything.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Let's talk about that. Can you remind our listeners, like back during the Great Recession, 2006, 7, 8, where you were and how it all went away and how you recovered from that?
So I lost $50 million. I had 800 houses and I had several apartment complexes. It was the houses that pulled me down. And, it's tough to cash flow on houses. Here's the reason why. You may say, okay, well, I'm making $200 or $300 a month from this house. Yeah, well, that's great, unless it goes empty. If somebody moves, you're going to have a couple months of lost rent. So what is that? That could be 8 months of that cash flow. And then you're going to pay $3,000 to $5,000 to turn it over. So you could have 2 years of lost cash flow for a house when it turns over. That's not the case with multifamily. And so, my multifamily pulled back in 2008 and 9, but I could have easily survived if I hadn't cross-collateralized those apartment complexes I had with packages of housing, which is why I started my podcast, was just to tell people, if you're going to buy and hold, for God's sakes, do multifamily, don't do single family. But let's talk about the psychological piece of this, because I'm going to tell you, fear will be rampant as things get ugly. The news will make it seem like it's worse than it is. I remember in 08, the news was saying, real estate's going to be bad for 10 years. And like I said, it recovered in less than 3 years in the multifamily front. And just remember this, the news organizations are not public service organizations. They are for-profit organizations. And we won't get started on the politics or the censorship or the propaganda that you see it. We won't go down that rabbit hole, but by God, just take it all with a grain of salt. I mean, I think we're at a point where you don't even know what to believe anymore. But back to the psychological pieces. If you listen to my podcast, so I'm blessed to host the largest commercial real estate podcast in the world. We're at over 20 million downloads now. It's called Lifetime Cash Flow. In fact, if you're listening and you can write this down, write down rodslinks.com. Rods plural, links plural.com. That's my link tree. And I'll have a boot camp coming up you can go to, but there's a lot of free resources there. And there's also something that'll really help you. And that's my goal setting workshop. Okay. This is the first piece of getting back on your feet. If you have a problem, you've got to build that hunger and that burning desire. And by the way, if you're driving, if you text the word links to 72345. Again, links to 72345. We'll send you that website. But there's a ton of free stuff there. My bootcamp site's there. The goal setting workshop's there. But here's the thing. The first thing you've got to do to either get started or to recover from loss is you got to get reassociated with what it is you want and why you want it. And so, like, if you come to one of my boot camps, the first thing we do is goal setting on steroids, because you've got to create that hunger, that burning desire. That's the first piece. And at the bottom of that link tree that I just told you about is my goal setting workshop. I do it every year around New Year's. I'll be doing it one again here in a couple weeks, but it's there. It's free. I'm not going to try to sell you anything. Here's the sad reality, Brian. People spend more time planning a Christmas party or a birthday party than they do designing their lives. And that's designing your life. You've got to have the hunger to push through fear, to push through limiting beliefs, to take action, to actually make something happen. And then you've got to make a decision. So that's what I did back then. I reassociated with my goals and got clear on what I wanted again. And then I made a decision decision to get out of my pity party and pick myself up and get going again. And if you're listening, you've got to make a decision as well. And so what do I mean by that? I mean, not dipping your toe in the water. I don't mean 1 foot in, 1 foot out. I mean, it is done. The Latin root for the word decision means to cut off. If you're going to attack the island, you burn your ships because you're taking their ships home. That's a decision. Okay. And then once you've made that decision, you're committed. And once you're committed, you're like a train on a track. If you're not committed, you're going to get knocked off track. And so that's the next piece, is to make a decision. And then you've got to take the first step. And, Dr. Martin Luther King said, you take that first step in faith, the next step will be revealed. And that was it for me. I had to take that first step. And when I was rebuilding, and I formed another company that turned into a big company, out of the ashes of losing everything. But maybe you haven't started yet. You need to go do something. You take that first step. And sometimes it can be a small step, but it could be the most important step of your life. Here's the thing I want to tell you. I know you've got a lot of analytical people on your show here, like I do. And you know who you are, and I love you. And you also know how you have to check off every single box before you make a move. Well, you can't do that here. Okay. You got to just have some faith and take action. And I'll give you an analogy. You can drive all the way across the United States at night with your car headlights only seeing 60, 70 feet in front of you. And you can make it. Other people have made it before you. You may have some obstacles, but it's the same way with any initiative that you take, including multifamily real estate investing. And I think I will tell you, if you fear failure, fear regret much more. We fail our way to success. I call them seminars. That was a $50 million seminar. I've built 27 businesses in my career, and several worth tens of millions of dollars. I have 2 right now that are, but most were spectacular, flaming seminars. Like I say, we fail our way to success. And so, in fact, I got to meet the billionaire owner of Spanx, the women's undergarments that hold everything together under their clothes, and a lady named Sarah Blakely, beautiful human being. But she told me that her dad, at another mastermind that I belong to for marketing people, she told me that her dad used to ask her and her brother once a week, what have you failed at this week? And I thought, what an awesome question to not fear failure. So don't fear failure, fear regret. There was this nurse in Australia, a hospice nurse that took care of patients that were about to die. And she asked him a question, Brian. And the question was, do you have any regrets? And she wrote a book about it, something like The 5 Regrets of Dying. And you know what the number one regret was? It was not living the life I could have lived, living someone else's life, not doing what I know I'm capable of. The next piece is you got to push through fear. So what is fear? False evidence appearing real, probably. And so, the successful people feel fear too. They just push through in spite of it. And, some people have limiting beliefs, like me. When I immigrated this country, I got thrown into school, found out what bullies were for the first time. And then my mom, I actually have it right here. My mom, proud Dutch woman that she is, thought it'd be a great idea to send me to school in these wooden shoes. So I got my butt kicked again. And then, some of the bullies lived at the end of my street, and she'd chase them off with a fly swatter. So the next day I got my butt kicked again. And I came up with this belief system. I wasn't good enough. I used to ask myself, how can I show them I'm good enough? And so a lot of people have these, limiting beliefs. And there's a reason, like, I'm not good enough. I'm not smart enough. I'm not analytical enough. That's another one of mine. I'm not old enough, young enough, whatever. And there's a reason the acronym for belief systems is BS, because 99% of them are BS. Just a couple more pieces here, Brian. I'm trying to move quickly. The next one is focus. The most successful people on the planet have the highest degree of focus. And wherever your focus goes, your energy is going to go. So it's really important that you manage your focus. And, I don't know about you, but I'll be watching Netflix and I'll be scrolling through social media, which is just the dumbest thing you can do, because your brain is making these micro decisions which kill your focus. So I listen to 2 podcasts. One of them is Joe Rogan. The other one is Tim Ferriss. And I try to get both sides of the aisle. They're definitely on both sides of the aisle. And I get excited about my 20 million downloads. They get that a week on theirs, I think. But on Tim Ferriss's show, so he interviews the best of the best in the world. Best athletes, Michael Phelps, NFL, NBA players, best actors, Arnold Schwarzenegger, Jamie Foxx, Ed Norton, Hugh Jackman, billionaires like Ray Dalio, CEOs like Zuckerberg, biggest in the world. And he deconstructs their success. And I started to hear a pattern, Brian. They almost all meditate. What does meditation enhance? Focus, right? And so, it's really, and I'll get the question sometimes, how do I get out of student loan debt? I'm like, wrong question. How do you make so much money the debt's irrelevant? That's the right question. They asked Mother Teresa if she was anti-war. She said, no, I'm pro-peace. So there you go. Okay, just a couple more quick ones. The next one is playing to your strengths. Whatever you do, play to your strengths. Hire, align, or partner for your weaknesses. And we see this in multifamily all the time. You'll see an analytical person partner with an outgoing extrovert. And that's a match made in heaven. I see those partnerships all the time when I'm interviewing experts on my show, and those, that always works out. I've always had someone analytical on my team. I'm the mouthpiece, and that just works really well. So figure out what you're strong at, and then if you play in that, first of all, you're going to love what you do. You're never going to work another day in your life. But the more important piece is you'll be passionate about it, and passion is required to influence. And so when you love what you do, you're going to have passion. You're going to be able to influence people, investors to invest with you, brokers to sell to you, and so on and so forth. And so, that's why playing to your strengths is so important. All right. Like the last one here is peer group. When I was losing everything in 2008 and 9, I was in Tony Robbins' Platinum Partnership. And I was around people that were killing it in that crash. I mean, they were thriving, okay? And I was losing everything. And they're like, get up, you puss, 50 million schmillion. Just get up and go make something happen. That's who you want to be around when the soup hits the fan, right? And so, the sad thing is most people default to people they went to school with or people they work with as their peers. And I'm going to tell you, you show me your 3 best friends, I'll show you who you are. Every aspect of your life, your health, your happiness, your relationships, certainly your finances. Because who you hang out with is who you become. I mean, everybody knows this. But so it's really, you got to be careful that you're around people that aren't going to, well, let me say this. When you have a dream, it's a fragile thread. And that thread can be broken if you're around the wrong people. So make sure you're around people that will hold you to a higher standard, that will push you and validate you and praise you, which is why my warriors do so incredibly well. My coaching students. By the way, if you're interested, there's a link you can register there on Rod's links as well to apply to that program. It's absolutely incredible. I feel like we fail anybody that doesn't join, frankly. But it's because they hold each other up. They hold each other to a higher standard. And a lot of us, we have people in our lives that, out of their fear of losing us or fear of rejection or fear of feeling less than, if you succeed, will hold us back or, diminish our dreams. And sometimes it's family. So I'm going to tell you, love your family, but proactively choose your peers. Choose who you allow to, influence you. And so that's pretty much it. The last piece is probably gratitude. I like to talk about gratitude because it's really how you manifest everything you want in life, and it's probably the most powerful emotion we have. It strengthens our immune system, lowers our blood pressure, brings us closer to our spirituality. And I do a great little gratitude thing every morning where I'll sit in my recliner and I'll be grateful for the people in my life that I love and my students and my foundation. And then I'll do gratitude for the things that I want as if I already have them. And sometimes I'll get emotional, be grateful for things I don't even have yet. And I know I lost some of you analytical ones on that one, but this is how I had 50 million to lose and how I got it back. Okay. So ignore it at your peril. But the last piece, which is kind of timely, I'd like to share one little tiny last piece here. So I lived in Denver for 30 years, but I always knew I wanted to live on the beach, and there's no beach in Denver, but I would visualize a house on the beach. Okay. That's what my dream was. And 20 years later, I built this incredible mansion on the beach. It's 10,000 square feet. It's probably about a $30 million place now. And there was a beach on one side, boats on the back side, a giant waterfall from the second floor balcony into the pool. You had to walk through the waterfall to get to the pool, big spiral staircase up through the middle of the house, wine cellar, elevator. On the second floor, I had aquariums built around the staircase, cost me almost $200,000. So this gives you the idea of the house. Well, 2 months after I moved in, I'm floating in the pool at night. And I'm looking up at this testament to my ego. It was to prove to the world I was good enough, okay? If that didn't do it, I don't know what would, So I'm floating in the pool 2 months after I moved in. I worked for this thing for 20 years. And I'm looking up at this testament to my ego, and I got depressed. And I don't mean a little depressed. I mean, I got really depressed. And I'm like, what the hell's going on? I've just achieved success like times 10,000. And there were several things going on. The first one is you should never achieve a big goal without having other goals lined up behind it. Like the good book says, without a vision, the people perish. You need a vision for the future. I didn't have that. Second thing is it's never about the goals. They say the happiest days of a boat owner's life are the day they buy the boat and the day they sell the boat, right? But you need them to create that burning desire and actually take action. But happiness comes from progress and growth. And I didn't know how I was going to grow beyond that. I didn't have a clue. So that was the second piece. But the big piece was I've been totally focused on me. Rod, show the world I'm good enough, blah, blah, blah. Well, that's the year I went and saw Tony Robbins. And I found out that he fed families for the holidays. And So I decided to feed 5 families that year and had an epiphany and a life-changing experience with tears and everything else when this family got a basket of food. And the reason I bring that up is we just fed 3,500 children this last Saturday, literally just did it. And over the last 23 years, I fed over 150,000 kids here in Sarasota and Bradenton, Florida, and done thousands and thousands of backpacks filled with school supplies. We did 1,700 of those in August. Done thousands of teddy bears to local police departments for officers to keep in their vehicles in case they encounter a child that's been in a traumatic situation. And I don't say this to brag, but see, in our society here, Brian, we've been taught to believe we shouldn't be happy until we've achieved. But I'm going to tell you, if you give back in any fashion, you're happily achieving. And I know it's a play on words. And Tony Robbins calls it the science of achievement versus the art of fulfillment. Achievement's a science. You want to learn multifamily, get your butt to my bootcamp. You go to Rod's links, the bootcamp site's there. It'll have the next one that's coming up there. And they're very, very reasonable. And, I'll give you the blueprint. You just have to go do it. Okay. That's a science. But fulfillment's an art. You got to figure out what juices you and go do that. For me, it's kids. Maybe for you, it's animals or the environment or the elderly, whatever it is, go give back right now. And don't say, yeah, you did it because you have money. You want money, do it because you'll get it faster. That's the way God works. So I'll leave you with that.
Rod, thanks for breaking it down so eloquently. And you shared so much great knowledge there. I have a specific question for you. Back when you lost $50 million and you got over it, what was the concrete first step that you took to get past that depression of losing $50 million and moving toward everything that you just brought up?
I will tell you, I hid under a rock for a couple of months, really, my eyeball poking out, in fear and self-loathing and all that stuff that you go through. Might have been 2 or 3 months. But then I did exactly what I just said. I said, you know what? I got to get out of my pity party. I got to reassociate with what I want, pick myself back up. And that's what I did. I did exactly what I just said. I did my goals. I created my whys, why my whys were important to me. I had to, the why is more important. And if you go to Rod's links, my goal setting workshop, I walk you through all this, and there's a guide you can download. It's all there. It's free. And because that's what I needed to focus on rather than the pain and of losing everything. Because I lost everything. I thought I was set for life, obviously. And guys, if the soup hits the fan, like I'm talking about, it is critical you have your goals done. So you have those in front of you, you have pictures of your goals in front of you. I got pictures in my office and in my exercise room of the things that I want. Have them around you so you're focused on that instead of all the crap on the news. And that's the first thing I did, brother, was just get real clear that I had to pick myself back up. And that's what I did. And then I actually formed, guys, like, I'm done with real estate. I wasn't, but I felt like I was. So I started this litigation support company. It turned into a $10 million company with 60 employees that I sold a few years ago, but now I'm back where I belong, which is real estate for sure.
Rod, what's your favorite hack or app?
I can't even spell the word technology, brother. I mean, we use Slack. I've got a guy on my team now that has the best multifamily evaluating software I've ever seen. I mean, it's fantastic. I mean, he worked for Intel for 20 years. His name's Craig, and and if you sign up for my bootcamp, you get a free copy of it. It's killer. I'd say it's that because it is so good. I mean, really, Brian, it is. In fact, I need to get you a copy. It is really good.
Please share anything that you would want our listeners to take action on, how they can find out more about you, get a hold of you, that kind of thing.
Rod's Links is the place. And I'm going to tell you, at Rod's Links, there's also this cash flow club we've created for passive investors. It's a great educational resource. There's videos there. There's articles. There's free books. There's emails. We do webinars every month about different topics. And it's the link is there in Rod's Links. So again, if you go to Rod's Links or text links to 72345, my bootcamp site is there. My goal setting workshop is there. There's a free book section with killer books. I mean, best in class books in some of the topics, and they're free. They're all free. And of course, the Cash Flow Club is there to learn about passive investing if you want. And again, we're not going to try to sell you anything. It's a free resource. Just go check it out. And honestly, I hope you'll listen to my podcast. I do a clip every week called Own Your Power. I interview some of the best operators on the planet, like you do, Brian, and I really love it, which is why it's been, it's the largest. I'm blessed to say humbly, it's the largest in the world for what we do. So it's a real, what's the word it's just a blessing, honestly, is what it is.
I'm really pleased that you were able to join me today on the show. It's always great seeing you and talking with you. And thank you for sharing your outlook on what we've been through in 2023, what you're kind of expecting in 2024, and how you got past the great seminar from the Great Recession.
And listen, let me leave this. Don't let me scare you, okay? I'm looking at things through these rose-colored glasses of opportunity. And so I'm in a lot of cash. I have access to cash. And if I'm wrong, great. If I'm right, there's going to be some incredible opportunities like the one we just got under contract. But, I'm wrong all the time. So if I'm wrong, I'm wrong. But we'll see. We'll see how it all shakes out. Anyways, great to see you, brother. Really good to see you.
You too. Thanks so much for being on the show today, Rod.
You bet.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIG investor.com.